my name is Adebayo Fabamise. Just actually a law firm that services a few technology clients, and I say a few because we are much more precise about quality or quantity. Uh, we represent a few Web3 based startups. We're also investors in a few projects as well. We currently are participants of the consortium that launched the Naira regulated stablecoin, that's the CNJ. Came on that project 3 years ago when it was starting, and we've been able to sort of grow that, start that project up to regulation and being able to to key into regulation, which is one of the reasons why this topic is very important to me, because what it allows you, what I hope it will allow you to do is to be more, to sort of build some level of foresight into being able to anticipate moves and key into those moves. Um, we currently operate in a very dynamic space. I mean, the entire blockchain Web3 space is as dynamic as it can. It's ever changing. Today, it's been banned. Tomorrow, it's been regulated. Next tomorrow, there are additional regulations. The day after, there is some little ban again. And while bans obviously are not what we expect, from a regulation standpoint, you sort of can envisage that some bans will come because of everybody will take advantage of new technology, take advantage of lapses in regulation to be able to carry out whatever nefarious activities they are going to. But then, what that then effectively does is negate, negate trust in that system. Because of course, if fraudsters are using it, then people are going to believe that's exactly what it's for. So we'll start with this very, very interesting topic: enterprise blockchain, what you should know and prepare for. I'll be speaking from the business point of view. I'm not technical in the real sense, so I cannot speak like my that sort of understands what it takes to roll out the technology in itself or the technology stack. What I can speak from is from other areas around that. And when I say other areas, I'm talking much more regulation, compliance, business development opportunities, and areas that we sort of should focus on. So let's start with what enterprise blockchain is. What exactly is enterprise blockchain? From what we are more familiar with, we're more familiar with private and public blockchains. Private in the sense that, it's sort of like a permission closed system, and probably from, accessibility, from looking at the accessibility and integration systems. But when you're talking enterprise blockchain is what I believe is an intermediary between both systems. Most of the sectors where blockchain is going to be going into they are still closed systems. I'll give you an instance. Financial institutions are still very, very closed systems. You cannot readily have access to NIPS, for example, without going through someone who has, you cannot just go and download the API documentation for NIPS and just plug into NIPS, because it's still sort of a closed system. But notwithstanding, other players in that system need to come into it. We need to be able to interact. So the banks need to be able to interact with them via a centralized settlement system, which is what NIPS does. So if a bank, for example, is building out its own private blockchain for its own, to build out its own wallet infrastructure, to build out its own, to build out specific for its customer, it will not be able to interact with the financial system without other people being on the same decentralized ledger technology, basically, or being on the same blockchain. So effectively, there has to be an overriding system that has to be built that will then connect each individual key players. This is where enterprise grade technology comes into play. So the focus on that is not just focusing on a specific business or a specific product. It's much more general, solving general business problems and improving processes amongst institutions or among sectors, rather than within a specific. You can build and say, oh, you're building for remittance, and that's for remittance. But then there is remittance as a system, there is custody as a system, there is payment as a system. What exactly is the connecting factor, and how do you then connect that to traditional systems? That is the role enterprise blockchain will play going forward, realistically going forward. And we've seen quite a lot of moves within that sector. A lot of banks are building out their own wallet infrastructure to be able to move to that system. A lot of banks are building, various factors, various, sort of mirror ledger systems. But then, how do we connect that under a sort of like a consortium system or an enterprise system? These are still, burgeoning issues that still need to be addressed. Whether we are looking at it from the finance point of view or from data protection, healthcare, and data transfer system point of view, there still needs to be a collective network for everybody to be able to key before any sort of tangible progress can be made by individual blockchain products. So if you have your own remittance system and you then have to start, you're still off ramping, and then you're still going through you're still moving from USDT to Naira to be able to pay into a traditional bank account. That's a very inefficient system. And that you're still subject to the cost of off ramping, whether you're off ramping from USDC to NGN or USDT to NGN. You still have that problem. And if you're settling in Brazil, for example, you still then have to sometimes move from USDC to USD, then from USD to local currencies. Those systems are still very inefficient because they are still clustered systems. And blockchain and payment systems and blockchain infrastructure built as they are being built right now are still cluster systems without integrating into existing traditional legacy systems, which is the opportunity I want us to collectively explore today. So, I mean, once we understand that, then we'll look at, okay, what exactly. So yeah, we look at exactly, I think I'm done with all these aspects as well. So of course, what are the benefits? The real benefits, realistically, as far as I'm concerned, is benefit number 3, which is operational efficiency and cost reduction. Like I explained, off-ramping, on-ramping, moving between systems is still, as it were, costly to builders, to developers, to business, to startups, to businesses within that space. And then you then look at what is in the traditional system. The moving money through SWIFT under the traditional financial technology system that exists right now is also still very expensive and very, and time consuming. So there is still no operational efficiency or cost reduction in that system. So blockchain in itself, sort of solves that problem. But it wouldn't solve that problem except there is some level of increased transparency and traceability, as well as some improved security and trust. If the banks do not trust that this system, we can funnel $5 million to this system to be able to settle JP Morgan in the US, why will the banks use it? Why would traditional financial institutions use that? As effective as OPay, PoundPay, MoneyPoint are, they are still very traditional systems, and they are not, they obviously have no use for the blockchain in ensuring payments. But then once we now go to traditional banks, access banks, GT banks, who do international payments, there is a very evident use case there. So how do we get these traditional legacy systems to work with us? How are we able to key into these areas? How do we explore opportunities within those spaces? How are we able to grow within those spaces? We understand the benefits of integrating what we understand and what we are building into these sectors. But how exactly will that be done? How exactly do we know how to go ahead, how to go about that? So what exactly are we going to consider? Ease of use and deployment. Are we building systems that are still going to be very difficult to use, where you still have to start doing character matching, for anything to sort of go through. Because for example, in blockchain, you could hash an entire page of text into just a hash sequence. And then once that is transmitted, it can then, of course, result back into the original document, which allows you to obviously just transmit data without the necessity of actually matching each specific character using those systems. If you don't understand how NIN works and how the passport system works in Nigeria, for example, you understand that every single thing goes through character matching. You fill out your details on the on the immigration website, and then it takes those details and goes to the NIN details, and then it matches those details and it comes back. And it's matching character-wise. It's matching A to A, B to B, C to C. So if your name is Kemi Tokwe, and there is a character, an additional one says PEE, the other one says PE, there is an issue for that character. It really doesn't matter whether all of that information is correct. It really doesn't matter if it's the same person. So how exactly is enterprise blockchain able to correct the inefficiencies in this system, make it very easy to use, make it easy to deploy, support multiple protocols? Can we go and use it across different systems? Can we go and use it across? Does it have cross-chain capability? Those are very critical features in deploying any sort of enterprise-grade technology, not even just blockchain-focused technology. Any sort of enterprise-based technology has to be for support for multiple protocols, and that's security and compliance, obviously, scalability and performance, integration and interoperability capabilities. A lot of people ignore that, and I hope I'm not just rambling, but because I feel like this is much more a conversational topic than it is. So I'll rush through this, and then we can just have a extensive Q&A so that everybody sort of understands it. Integration and interoperability. If you follow the e-Naira fiasco, you would understand why, as much as the Web3 startup system is growing, there is still a gap when you talk about legacy systems. When the CBN wanted to build out the e-Naira on the private blockchain, they outsourced that to a company in Malta. It wasn't to Nigerian developers, it wasn't to Nigerian companies. I mean, at least for version 1. It was to people, it was to a company in Malta. If a company in Malta comes into Nigeria and tries to build out the e-Naira system, there are salient local context that they need to understand. The way we spend money in Nigeria is not the way they spend money in Europe or in Latin. If you're building out a payment system in Nigeria and saying you're only going to focus on cards, for example, you're wasting your time, because now payment is moving from cards to pay by transfer. If you say you want to use payments via QR code, you're wasting your time. Because effectively, even if you say card system still works, card system is just a fraction of the market. So if you're building out solution and you don't understand the local context, there is bound to be some gaps. That is why local developers that understand the landscape are in the best position to dream of products that will work within the local context. But then if those local developers are just building in silos and not looking at how exactly we can integrate with traditional systems, or there is some level of interoperability with the traditional legacy systems, then of course, they are still limited by growth. You can say, yes, you're doing 200 and a certain fraction, millions of dollars in crypto transactions, in stablecoin payments, $200 billion moves in Nigeria in stablecoin transactions every year. Good and fine. But even the funds that go to stablecoin payments come from the traditional banking sector. We still spend money in Naira here. So even if you have 100,000 USDT, you cannot spend it. You still have to move to Naira. When you go to the local shops, you cannot spend that money. You cannot spend your USDT. You have to first find a way to move to Naira before you can spend. So now imagine the people that are not even interacting, the volumes that the banks are doing when they're not even interacting with the blockchain. The fraction of the country that move funds that don't even interact with the blockchain. If the 200 billion is still going to, at least a large fraction of that is still going to interact with the financial system, now consider the fraction of the Nigerian financial sector that doesn't even interact. That is what I consider the real addressable market. Not the 200 billion that we're talking with respect to stablecoin payments, but the entire financial system in Nigeria. That is the real addressable market. So if you're building in silos and everybody's trying to take a fraction of that 200 billion in crypto transactions, the banks are still, declaring 1 trillion naira in profit per quarter from a single bank based off traditional money flows, based off traditional lending, based off traditional loan system, based off traditional deposit taking, based off traditional payments. That is the real addressable market. That is the real, the real target for Web3. That is the real target for blockchain deployments. So let's now go to the bigger context of it. I've explained, Nigeria's position as a digital payment leader. Nigeria went ahead, one of the very first countries, China, one of the top 5 countries to dream up a central bank digital currency. And in making that move, that, okay, it was a very important move at that point in time. Obviously, still failed, but it failed because the enterprise grade system for its deployment and use did not exist. The banks didn't have the infrastructure to hold it. The banks didn't have the infrastructure to use it as a means of payment. The banks didn't have the infrastructure to deploy. Nigerians didn't understand. The average Nigerian does not want to know what system is being used to pay my money when I go to the merchant and I want to pay. I don't care what OPay, money point, how they make the payment possible, as long as the payment is possible. Who cares about that is the business. If eNaira has been packaged with very good system, with very good system of deployment, with existing infrastructure, yes, then maybe it would have succeeded. Who knows? Of course, aside from the political aspects of it, who knows? So when we have such forward-thinking approaches, but then the infrastructure for wide-scale adoption does not exist, then there is still a gap. And now we are rolling out, of course, more blockchain engineers, but are we able to adequately understand the addressable market? Are we able to adequately understand the gaps? And I may be wrong, really, but from eyeballing it, 80% of crypto-based startups are much more financial institution inclined. Maybe the other fraction is now working on real-world assets. But the Nigerian financial system is divided into 2: payments, security, the banks, and shares, equity. Nigerian shares have been one of the best performing properties over the past 30 years. Particularly, except for banks that fail, most banks are held their own. Most banks are giving returns. Most banks, their securities are going up. MTN, most of the people who bought in MTN have done 3x since they bought in, since MTN IPO. A large chunk of the traditional business funds are still being held in the securities market. We are still, and the securities market is obviously being proactive now. Agama has been very, 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 and Agama being the secretary, has been very, very vocal about his approach that capital market operators must move to blockchain. He's not saying, oh, let's consider blockchain. He's saying blockchain is here. You either adapt or you die. So how many blockchain developers are trying to understand the system of share transfer, the system of share issuance, the system of settlements, the liquidity that powers the capital market, and trying to innovate or build around that? Or trying to, or are you actually applying to some of this? Are you applying to NGX? Are you applying to CSCS, telling them, I understand this thing, I understand your market, I understand the blockchain market. I can, in fact, I plug in, consult, help with moving from here to here with adoption. Even if some of these bigger firms will bring in external consultants, bring in external companies to sort of build. They will build that, but they still need in-house engineers, they still need in-house developers to understand, to manage, to adapt to ongoing changes. When the consultant comes in, builds, deploys, there are still updates, like quite a lot of opportunities still being missed there. I had a conversation with someone at Nuremberg last year where they wanted to build out. They were actively seeking consultants to build out. They were actively seeking people to help them to consult, to build out their own infrastructure towards acquiring a virtual asset license. And you see quite a lot of moves like that, very salient moves, but exist. And only people with knowledge of that sector, with knowledge of operational capability within that sector are just able to key in. So when you then look at the regulatory moves between the special assets landscape, then the CBN's new approach to, of course, I've been reliably informed that the CBN is also working on its own token system and token payment system for virtual assets. It's also then working with the FIRS on exactly how they can integrate a very similar system with taxing VATs on transactions with special assets service providers as well. Those are still are in the works. And the only system that exists, the only way that system would exist is if there is a high level foundational infrastructure that everybody then has to plug into, and then everybody then has to build out of, and it then creates a network. We have capital market operators in Nigeria are in excess of 100, from stockbrokers to payment houses to capital market to trustees to custodians, quite a lot of them in the capital market space. How exactly are we looking at our opportunities within that space and building with these guys and building for these guys is also like a very critical thing. And regulation is usually an indicator of that. And then once you see the direction regulation is going, you'll be able to understand where the next possible opportunities lie. And the next person is obviously going to talk about the new tax act. So you will see, with respect to the new tax act, there has to be systems will need to be built around that to be able to adequately tax. Who is already working towards that line? Who is already trying to understand the taxation system, towards understanding how to build, how to key into that, so that you can readily tell FIRS and say, look, yes, we have a solution here. We can help you do this. We can work towards this. A lot of guys already do. I think Chainalysis already does some sort of like tax system as well to be able to help you tax, a tax focused system to be able to do crypto tax. So a lot of systems have been built, a lot of systems beyond the traditional exchange, payments, remittance, just very wide, basically. So yes, the core value proposition of whatever enterprise-based system is going to be built is the trust problem between organizations. Everybody has to come together. The best approach is obviously consortium-based systems where everybody comes together to build out. The other aspect is building from the regulators or coming from the regulator point of view. And no matter what, it's like it's a web. It's a web. The current NIP system will go to a bank. A bank will give a microfinance bank. A microfinance bank will give a PSSP or PPA, like a payment service provider, anything. It just becomes everybody then begins to integrate. But the foundational integration is based on the understanding of how the settlement and money flow and the traditional banking ledger system works. Because blockchain in itself is just a mirror system. It's not exactly distinct. It's not a new innovation in sense. It's just a new way of doing what's been already done. A much more secure, much more transparent way of doing what's already been done. We already pay. We already move funds. Can we just do it more effectively? So understanding how to do it more effectively and understanding what's already been done You cannot say you are building a more efficient system if you don't understand the system you're trying to replace. So that is obviously creating a single source of truth across entities. It still fits the same. It still fits the same thing. A central system that everybody connects to, enabling new business models through digital assets. That is where everybody will still end up, settling into. When you build the enterprise base with the banks, with the consortiums, at the end of the day, 3, 4, 5 years you leave. Similar to what GB did with Flutterwave. It being the banking sector, that at the end of the day, you work in the banking sector, you understand how the payment system works, you understand how the traditional infrastructure works. You then want to build on top of that. New business models will then begin to emerge from enterprise-based technology, and they'll be more effective realistically because of them being built with a central source and with the most liquid source, the most effective source. The CBN is not going to allow foreigners or foreign blockchains control the Nigerian financial sector. It's not going to happen. The SEC already has a mandate that for anybody to get a license under the SEC, you have to be a Nigerian company. We have to see that you're a Nigerian company owned by Nigerians. And the only other people under foreign entities that would get such privilege are foreign entities that extend the same privilege to Nigerians. Is the concept of nationalization. We will control critical infrastructure by ourselves before others. So realistically, new models, a Bybit, a Kraken will not be able to connect into the financial sector. But a traditional Nigerian business will be able to do that. Has a better chance of connecting into the traditional system than a Bybit, than a Binance, than a Kraken. And that's just facts. That's just the facts. A lot of people are already obviously keen into that. And I mean, the Chinese are very notorious. We've been able to infiltrate systems. But the systems will still exist. Reconciliation and delay costs, reducing reconciliation cost and delay, that's specifically sweet. That is, settlement in Nigeria is done 4 times a day by NIBS. And over the weekend, there is no settlement. So you can understand how inefficient that system is and how blockchain can allow instant settlement without human oversight, and how that can revolutionize what the current settlement system in financial sectors can be. Reducing the delays, reducing the cost, reducing even the human factor in settlement. Because if it moves, it moves. You're not waiting for NIBS to tell you the funds have been moved, or for lumping up transactions and then moving it because of the cost and things like that. Once it moves on the blockchain, it is moved. So obviously, like quite a lot of inefficiencies and quite a lot of solutions that can be brought into play. So understanding legacy systems is what I'm talking about. You have to understand what is being used right now. Currently we have Finco, we have T24, Flex Cubes, quite a lot of enterprise technology being used by the banks at the moment. You have to understand how they work, and you have to understand how to integrate into that. The FNS, which is one of the wallet infrastructure providers, I had a conversation with them on the Nigerian market, and they have the position that Nigeria, the banks do not have in-house capacity to integrate anything. And I thought that was a joke until I had a conversation with the tech team at Premium Trust. And I can tell you for a fact, there are spaces for blockchain developers right now, because in-house capacity at a lot of Nigerian banks, technically, some exist. I mean, Sterling has, I believe First Bank has, Access is building out, but you have Premium Trust that doesn't have any. You have, Alpha Morgan, which is relatively new, who knows how many they have. But there are still gaps. There is still the need. They are still always growing, developers and looking for developers that could allow them to exploit into the new wave. And that is still a very, very, very open space. Very, very open space. Because if you understand how the blockchain system works, and then you understand exactly how they can integrate it into their system, whether by integration or whether through what I call mirroring, where you're just able to mirror everything that happens here on that system towards phasing out one system. A lot of mirroring systems will go on before any sort of blockchain enterprise system can enter into the traditional financial institutions. It would first be a mirror system before it would be anything else. And that is exactly where to start from. So they are already starting with that. They are already saying, how can we have a wallet tied to every account holder? Those things are already going on, and you just need to understand the landscape to be able to plug in. So I'll just run through the names, card systems. Of course, card payment is also in itself there. Then another critical area I've spoken about security, I've spoken about banking. I want to talk about identity. Identity data protection is very critical. We have inefficient NIMC. We have BVN that exists. We have NIMC. We have your password ID. And then soon we are going to have new integrated tax IDs. How many IDs does one need? How many IDs does one need? And I then got to understand what the ZK protocol, which is the zero knowledge. And then imagine the impacts something like that would have for identity management, where you effectively can have centralized identification and you can then plug in only specifics. When you're trying to get something done, you can only share specific data that are necessary for that specific purpose, only pushing out information as necessary, while anonymizing the others that are not necessary. If you look at driver's license, that's all your details. All your details. There is a real potential, for blockchain to revolutionize digital identity, KYC, and data protection, whether through the ZK protocol or some other level of experimental cryptography that one can actually just practically, try out. I understand one of the guys that I met as well, also obviously, is an alumni of Web3, and very lovely breakdown he gave us about ZK. Well, you see a lot of Web3 people doing experimental things as far as I'm concerned. And, for you to zero into that space, it's experimental, there are still things we maybe around it, but you then become an expert in that new phase. Just like one of the things like we want to see much more of, our own people building out, experimenting with new aspects of cryptography. Yeah, so regulatory compliance and technical requirements. Of course, we will still see quite a lot of this still being built out by the SEC, by the CBN, token classification, whether it's security token, utility token, payment tokens. You will still see a lot of all that. Investor protection mechanisms. Regulators have three roles. Basically, they have market development, consumer protection is very, very critical, and then money laundering and terrorism prevention. That's standard financial protection is very, very critical. They want to protect the consumers to make sure that they're not being exploited. They want to protect the market. Then they now want to protect us from people utilizing it to fund, criminal elements and things like that. So they have very wide rules. So you see quite a lot of that coming into play. So when you're then doing security tokens, the consumers and the investors, you then have to protect the consumers. You have to make sure when they're pumping money into these things, they're not pumping money into MMM or into some other level of, shitcoin or Ponzi scheme, basically. So that's very critical. And a lot of those things, you also then have to, when building out products, you have to build out products that key into this. You have to establish that your product obviously protects the consumers, whether they're being traditional investors, security instruments, or general consumers with respect to payment tokens or utility tokens. Exchange and custody requirements, obviously, you have to consider that when building out your infrastructure. Then disclosure and reporting automation. A lot of people who have worked with KYC, automated KYC, Go AML, a lot of all these things will understand what I'm talking about. President to certain disclosures that need to be filed. with the NFIU, with the EFCC, the Central Control Unit Against Money Laundering, EFCC, a lot of things that needs to be done. Are you automating that into your system such that, you know, when triggers, when certain events occur, you know, those reports are auto-generated and can just keep you in line with regulators? Okay, of course, FIRS tax compliance. I think I'll just leave this for the next person to come and explain. Uh, you know that, but yeah, but this is going to. I mean, from January next year, we can expect that if you're building out a solution that doesn't, have any sort of automated tax computation or transaction monitoring or integration with FIRS systems, you will be in for some issues. We can expect that there will be some issues in that, in that regard. Yes. So, how do we identify and develop opportunities? So, I'll take this one very closely. One is the most critical one, as I believe, is future trends to monitor. You just have to be able to understand where exactly are indicators going. In some instances, that will be difficult because you may not really, really be able to capture exactly where the indicators are going to, but you need to just watch it. There is a vast ecosystem expansion. Kenya just signed their vast bill into law. It's now an act. What exactly does that mean? What is the AI blockchain convergence, inter-blockchain communication protocol? You see Bridge working on that, cross-chain capabilities. You see a lot of that, and regulation technology evolution. Like I said, with FIRS, with CBN, with SEC, everybody wants to be looking at what everybody's doing. They want transparency, but they want to be able to monitor to protect not just consumers, but also counter financial terrorism and money laundering is also very critical to them. So a lot of regulatory technology will also be evolving over time. So you just have to be able to do that. And then when you find something, you then have to go into compute it. What is the return on investment for this space? Can I speak to a few people? Can I engage with stakeholders to understand where exactly we are doing? Can I do it alone, or do I need a few people within that sector to come together, which is where the consortium forming strategies that comes into? And then, of course, pilot project. You then have to start with a pilot project and see whether it will work out fine. And then if it doesn't, you can then iterate before any sort of real life go to market. I think my time is actually fast spent. So let me yes, I think that's pretty much it. So yes, what do I expect for us to be doing after today? Learn about the existing market infrastructure. You need to build your knowledge on existing market infrastructure. What exists right now? What are we trying to replace? Then partnerships, understanding the roles of brokers, custodians, registrars in the entire financial systems. Who holds the banks are considered custodians because they hold their funds and they move some of that to CBN. Then we have brokers who handle stocks, securities, we have registrars. The entire financial sector is ripe with this thing. I mean, this can be expanded to even supply chain management. How do people, authentication of supply chain from China to Nigeria? How do we confirm that what we are getting from China is authentic? Blockchain can help with that, but you have to be able to partner with, whether you're partnering with airport authorities, you're partnering with the Shippers Council to be able to build something, or you're partnering with NAFTA, or you're partnering with pharmaceutical companies to be able to build out something. Partnership is very wide, and the sector is very ripe, for plucking, as far as I'm concerned, because everything just works right now, and then the traditional system still exists. But if you can make it more efficient and cheaper, then there is a space for that. So, legal advice: we are studying Nigerian financial regulation and compliance requirements to be able to build in tandem with regulation. If you build outside, that's fine, but always build with the understanding that as I'm building, regulation is still going to come in. So I need to be ready and be able to take it, and I need to be protected from EFCC, from ICBC, from NDLA, from the police, from SEC, from CBN, from NFIU, from everybody, from FIRS. You need to consider protection from those people. Yes, that's the end of my talk.